Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. It has been a roller coaster ride for Vodafone Idea, also known as VI, between a near imminent closure to a faint hope of survival, primarily because of the huge telecom charges that it owes to the government by way of spectrum dues and by way of AGR, which is adjusted gross revenue. The company is burdened by an unsustainable mountain of debt, which, as at 30th September 2021, totaled to rupees 1,95,000 crores, of which rupees 1,08,000 crores is due towards spectrum user dues and rupees 63,400 crores is due towards AGR, the government's share in Vodafone revenues, which has been the root cause of all its financial problems. The company also owes 22,700 crores to various banks and financial institutions. With the determined Supreme Court refusing to give any relief to the embattled telco, the telecom company, and pursuing the recovery of such dues by the government, and Vodafone being in no position to pay the dues, the option before Vodafone was either closure or some kind of a government rescue or relief package to give it much needed time to repay its massive dues. A closure of Vodafone would have meant a duopoly of Reliance Jio and Bharti Airtel in the vital telecom sector in India, and it would have also meant a write-off of thousands of crores of bank loans and investor funds which have been put into Vodafone. The government therefore worked out a rescue package in September 2021 which gave all the telcos the option of a 4-year moratorium or deferment of their spectrum and AGR dues subject to payment of interest, which would be converted into equity shares to be allotted to the government by these companies. So under the plan, telecom companies could defer their telecom payments to the government, which incidentally in the case of Vodafone totaled to rupees 1,71,400 crores, which is including the spectrum dues and the AGR. And this deferment could be for a period of 4 years and pay the interest during this period of deferment by allotting equity shares to the government. This rescue plan of the government offered no write-offs of telecom dues or any such concessions by the government to these companies. All that this rescue plan did was to give a moratorium of 4 years, an additional time of 4 years, for which interest could be paid by these companies either by way of payment in cash or bank, or by way of allotment of equity shares, and not necessarily payment by way of cash, as we said. The Vodafone Idea Board of Directors informed the stock exchanges and the Department of Telecommunications yesterday that they had approved the conversion of the full amount of such interest related to the spectrum, auction installments and AGR dues into equity shares to be allotted to the government by Vodafone. The value of such interest being converted into equity shares is rupees 16,000 crores, towards which shares will be allotted to the government at par, since at the appointed transaction date, which is 24th August 2021, the market price of the Vodafone shares was below rupees 10, and thus the government will get each share of Vodafone at its face value of rupees 10. Upon such allotment of equity shares by Vodafone to the government will own 35.8% of its capital, and it will thus become its biggest shareholder. Upon such allotment of equity shares to the government, the combined total equity of the Vodafone Idea promoters will actually fall from the present 72.5% to 46.3%, in which the shareholding of Vodafone would be 28.5% and that of Idea would be 17.9%. And by this, the government will be put in the owner's driver's seat. The mode of allotment of such shares, the terms of conversion, the modalities of governance, and the interstate shareholder relationship between the government and other shareholders by way of a shareholding agreement are yet to be worked out. The Department of Telecommunications says that it will soon hold discussions with the Finance Ministry about converting its dues into equity. The government shareholding in Vodafone is expected to be held by the UTI or any other trustee kind of a mechanism to be worked out by the government that is under consideration. Upon such allotment, the government will become the owner of 3 telecom entities in India: BSNL, MTNL, and Vodafone. And it will also be a minority shareholder of TTML, a Tata Group telecom company, which also has opted for this option, and it will allot 9.5% of its equity to the government for this interest on deferment period that the government has offered in its rescue package. To allay obvious widespread fears that with such allotment of shares by Vodafone to the government, it will not become a public sector undertaking, the senior government functionary said that the existing management will remain in charge of Vodafone and that despite a near 36% stake in the company, the government will not even take a seat on its board of directors. He said that the focus of the telecom reform package of last year was to bring about liquidity and to de-stress the telecom companies and not to take any voting rights and make them into public sector undertakings. The senior officer also said that the entire idea of the rescue package was to support the sector given the circumstances and not to become an investor to maximize the government's investment in it. He further said that it will be desirable for the government to offload the stake as soon as the operations of these companies stabilize. And as we said, the stake is going to be allotted by Vodafone as well as by TTML. In the case of Vodafone, it becomes the largest shareholder of the company. This unprecedented investment of the government into a telecom company to become its biggest shareholder expectedly evoked a mixed response. The immediate reaction in the stock markets was negative, and the price of the Vodafone share fell by about 21% yesterday in a single day, only to recover later today. So what were the industry responses to this proposal of Vodafone to allot shares to the government? A former CEO of Bharti Airtel remarked that as far as investors are concerned, Vodafone ideas move signals to the marketplace that they are not able to raise the requisite funds and therefore they require government help. From the fundraising perspective, he said, it weakens their position. With the government's indifferent record of managing public sector units, especially BSNL and MTNL, chances are that VI will not thrive in this type of a management structure and that it's going to be a weak structure. A Citibank research report said that the onus is on the company to successfully complete its capital raise, to accelerate network investments and to stem subscriber losses which come with their fair share of challenges. Citibank further says that there is still considerable uncertainty on the ability of the company to meet its enhanced payments to the government after the moratorium period ends, which would require far more meaningful tariff hikes by the company and potentially further relief from the government, of which there is no certainty, as Citibank points out. Another telecom expert remarked that availing the debt to equity conversion option so early in the 4-year moratorium period appears to signal that the promoters did not have any intention of putting up substantial equity, at the back of which fundraising also becomes difficult without promoter commitment. The promoters clearly are not willing to put in more money and the government had to step in. The company thus had no option but to avail of this option of allotment of equity to the government towards the interest that will be due during the deferment period. Another telecom expert said that it is unlikely that the business will sustain unless the government comes out with a definitive plan of reviving the business of Vodafone Idea in consultation with the existing shareholders of the company. Yet another analyst struck a positive note to say that the joint tag with the Government of India could open up new possibilities of the company if properly managed. Of course, few agree with this opinion. The likes of UBS brokerage said that Vodafone Idea is now in a better position to raise external funds. It said that on a positive side, the company is now in a better financial position to raise funds and the possibility of future flexibility in payments to the Department of Telecommunications is possible, as well as that, according to it, the government will have interest in protecting the equity value of the company because it itself is becoming its biggest shareholder. On the negative side, UBS says that the potential concerns in management style and governance could be raised, although it depends on how much the government is involved in the management of the company. As of now, the government says that the existing management will continue and it will not even take a seat on the board of directors. Let us see whether that finally happens or not. To us, the key takeaways from this proposed equity stake of the government in Vodafone Idea are many, and they are worth talking about. The first one, this allotment of equity towards interest and the deferment of telecom payments is just to us a temporary reprieve to Vodafone Idea. It's a mere moratorium with no cuts, no write-offs, and the Vodafone balance sheet remains debt-laden. The existing liabilities have not been pruned under this rescue package. There is no significant reduction in the company's liabilities, and it will need frequent equity infusion for its survival, which has not been forthcoming from the present promoters, and you could not expect it from the government either. The government itself is cash-strapped. The second takeaway is that cash flows of the company need to substantially improve from a present average revenue per user of a mere rupees 109 to at least rupees 250 and above. Without that, the cash flow deficits will emerge in Vodafone, not just after the 4-year moratorium period, but even during the moratorium period itself, and to make the operations unsustainable. Further, whether investors and lenders are willing to invest in the company will all depend on the government's behavior. If it interferes in the company's management as its largest shareholder, then even the most optimistic lender and investor will refuse to give it money, which it so badly needs, especially during this moratorium period when its cash flows are expected to stabilize. Then, till the government's exit plan or timetable is not clear, despite its non-interference, lenders will be wary of lending and investing in the company. For its survival, Vodafone Idea needs to regain its market share and reclaim its subscriber base, which has been shrinking rapidly month after month. Finally, if Vodafone Idea is not able to invest and move into 5G, then it is possible that Bharti and Jio will command a 90% telecom market share in India in future, leaving just a balanced 10% for fringe players like Vodafone Idea, which is what it would become in case it is not able to make further investments in the sector. All that the government has done, according to us, is that it has given just another chance to Vodafone to survive, but survive on its own efforts, on its own strengths. And if government happens to interfere in the management of Vodafone Idea, then even this little chance that it has given to it will prove to be of no use. The fact of the matter is that this option was available to Vodafone Idea since September last year. And since then, the promoters have not been able to raise capital. The bankers have not given it money. The scene does not change at all any further. Let's see, where does Vodafone finally go? Or whether it becomes yet another BSNL or MTNL. This is Akhilesh Bhargava signing off till we meet again. Namaskar.